Hello guys. Um, okay, I think I have my slides wrong. What's going on? Yeah, give me a minute, please. Okay, so my slide is good. Okay, so now we're going to talk about market structure. What is market structure? Because this is one of the pairs that a lot of traders would find difficult. This is one of the, I say pairs, sorry. This is one of the topics that a lot of traders would find difficult when it comes to trading, especially if you're starting new. Market structure is a big deal for you. It's going to be a big deal for you. And this video would be a little bit lengthy. So I want you to grab a chair, grab a popcorn, your book and pen, and let's dive into it. Okay? Because there are lots of things I want to explain to you, and I'm going to be giving practical examples. I'm going to be giving practical examples. Sorry for my last video, my voice was really cracked up. If you could tell from my voice, I was struggling. I was really trying to, you know, keep up, but I had cough and catarrh as well. So I was really trying to make a video for you guys. I did want a day to pass so that I did not make a video. So please forgive me for that. And let's go into this. So market structure. Now, when you talk about market structure, you're talking about how the market looks. I've done a video on candlesticks, but I've not done a video on chart patterns. So we're going to treat chart patterns, but first of all, let's talk about market structure. I know I made a video on what do you call it? I know I made a video on what candlesticks, yeah, trading windows. Um, there's a video I just made. I don't know why it's not appearing here. It's supposed to show up here, or is it locked? Oh, that video could be locked though. I have to go check it back. So, well, let's um let's dive this deep into it. Give me a minute. I think that video is locked. I need to check it now. I made a video. I don't know why it's not. Oh, it's locked. It's actually locked. How do I do this? I need to unlock it. Yes. Yes, I've done that. Okay, so save now. Okay, it's no longer locked. So it's no longer locked. So it should show now. Just hold on, let me confirm, please. I have to do a refresh. Please show, please show, please show, please show, please. So what's going on? Supposed to show here now. Come on, man. Yes. So yeah. So I did a video on orders. Yeah, support, resistance, leverage and lot, trend line. Yeah, candlestick. So now, and also pips. So now, yeah. So now we'll talk about market structure. In market structure, we're going to talk about the trend. So there's something they call trend. Trend is simply um, the movement of the market overall, the overall movement of the market. So it could be an uptrend, it could be a downtrend. All right. So there's some vocabulary that we're going to be looking at, which is a sell, a buy. I think I did this already. The differences between a sell and a buy. Remember when we did that on one of the videos where I was talking about what sell looks like and what buys look like. The other vocabularies that they use for sell. Sell is bearish or bears or shorts. Why buy is bullish or bulls or long. So now we're going to talk about downtrends, uptrends, ranging market or consolidation. They are the same thing. All right. So let's go. So For a buy, this is what a buy looks like. A buy price values for a buy, if you buy the price, values of that price should rise. You get, so it's a good place to buy. You buy low and you sell high. So for a sell looks like this where price keeps going down. So when you sell a product, the price keeps going down. So for sales, price values should fall. All right. So you sell a product when the price is high and you buy a product when the price is low. So you buy from a low point and you sell from a high point. Okay, that's what it looks like. So, but now let's talk about uptrend. You know, I started with trends, what trends look like. Now, for a trend, it is known as the overall movement of the market, either upward or downward. So you could have an up, down movement, but in overall, they are all facing up. It is all going upwards. I don't know if it makes sense, right? So in this case, you have markets doing series of a high, a low, 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 a high, low, high, low, high, low. Like it's making series of higher points and lower points, higher points and lower points. But overall, the trend is up. It's going upwards. So it is called an uptrend. This is called an uptrend, and it is signified by the highs and the lows. So for a trend, for an uptrend, you have the initial low and the initial high. Then it comes back to create a higher low at this point, then comes back to create a higher high. The reason why they call it a higher low is because this low point is higher than this low point, and this high point is higher than this high point. So for a uptrend, everything is higher. So whenever you're talking about uptrend, just remember that everything in an uptrend is higher. It keeps going high and high and high. So you see your higher highs, your higher lows, your higher highs, your higher lows, your higher highs, your higher lows. All right? Does that make sense? We have a high here, higher high, higher high, higher high, higher low, higher low, higher low. So I'll show you on the chart what that looks like right away. So this is what it looks like, all right? So you see overall, we had series of up and down movement, up and down movement. I think I should get a pen. Yeah, so we have series of, ooh, no, 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 I don't want this. Sorry, 1 minute. What color? I don't even know the color like this. I think I'll use yellow. Okay, let's see. Okay, yes, so we have series of up and down movement, up and down, up, 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 down. So it's just been series of different highs and different lows, you understand? But overall, we have markets going upwards. You understand? Overall, we have markets going upwards. Markets is just going up, all the way up. You understand? So this is what they call an uptrend. But in this case now, the highs and the low, you're picking out the highs. So your initial points like this, let me see. Yeah, your initial points like this. Hold on. Yeah, your initial points. Oops. How do I get rid of this? Okay. Your initial points like this are your highs and your lows. You get your initial points like this. So these are like the areas in which market is giving you a a high and a low. You understand? So market is giving you this low, high, this low, high, this low, high. So overall, the overall movement of the price happens upwards. So market keeps going up and up and up and up. Right? So this is why this point now is called your lower high. This point is called your low. This point here is called your high. This is your higher low. This area here is called your higher high. This area is called your low, your higher low. This point is called your higher high. This area is called your higher low. This point is called your higher high. Here is called your higher low. Do you understand what I'm doing? So because this thing is like this is why we are focusing on the overall area, right? On the overall area. I know why I'm putting it this way because a lot of confusion might be there. You have markets stalling around this area, but this is actually the high area and we have the low area. So after a high, market usually come back to give us a low area, right? Just like the picture you saw before now. All right. So this is this is what it means. So we have series of highs, a low, a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, a higher high. As long as as long as the market keeps breaking upwards, this is what I mean when I say breaking upwards. Let me see if I can find a pen here, a line. Yeah. So this is what I mean. You see this point, market broke above this point. Now you see this point, market broke above this point too. You get, now you see this point here, market broke above this point as well. You see this point here, market also broke above this point. So as long as market keeps breaking upward, 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 that it didn't break downward. If you notice this low part of this chart, market didn't clear this low. If you see what is happening here. So this was like the low point, the low area of this chart, market didn't close it. So in an uptrend, market keeps breaking the highs. It keeps breaking the highs, the highs, the highs in an uptrend. So now let's talk about the downtrend. Let's talk about downtrend. So, okay, so this is another example. Okay, this is another example where market breaks lows, breaks highs rather. There was an initial. No, I need to use black because now we're on a white screen, so I need to use black. So there was an initial high here. This was the low, the starting low. Market took it out, came back, gave us another low, which was not lower than this, right? Now, the high point here, it took it out. If you see what's happening here, markets took out this high point, this high area. Market took it out and kept making more highs, more lows, came here, gave a low here. After all this rally round, came back and gave another high. It came back, broke it again. Do you understand? So market keeps giving more highs, more highs, more highs, breaking more highs, and the lows are still being respected. They are not being taken out. You get, so this is a full example of what an uptrend will look like in the markets. The more you see these markets do all of this, the more it is valid to to go up. Okay, so let's hold on. I want to do something. Okay, okay, yeah. So let's talk about the downtrend. Now for the downtrend, just opposite to what the uptrend is. For every market here, for every highs and lows in the downtrend, they are all going lower. You get, the uptrend goes higher. For the downtrend, every highs and lows goes lower. You get, so you have the initial highs and your initial low. The market keeps making more highs, more lower highs and more lower lows. So you have your high, your low, your lower high, your lower low, your lower high, your lower low, your lower high, your lower low, like that, all the way downwards. So market keeps making lower highs and lower lows. Look for a long-term sales and short. So in this kind of market, you're selling. Remember, you sell at a high point. For a bullish market, you buy at a low point, right? For a bearish market, you sell at a high point, right? So this is how it looks like on the charts. This is how it looks like on the charts. So on the charts, you have series of highs, lows, highs, lows, highs, lows, highs, lows, highs, lows. So market keep taking out the highs, all the highs, the lows rather. Market keeps taking out all the lows. This was a low, you get. So market created this high here, came back, gave a low, gave another high that was not broken, gave a low again. This area is the low area, right? So I'm going to just put it here. So this was the high it gave. It didn't take out that high. So it keeps taking out, breaking down to the low points. It gave you, after breaking here, it came back, gave you this high, yeah, and came back. See, this was the low that it gave that led to that high, and that low was taken out, giving another low here, this low area here, and another high area here. Came back, gave you a low here again, and another high which was not taken out, and another low here, taken out. That low also gave a high, and that was not taken out. A low also here that gave this high was not taken out. A low here as well that gave this high that was also not taken out. So you understand the scope. We have a low, a high, a low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, just like that. So a downtrend market is a combination of a series of lower lows and lower highs. All right. So like I said, we have three kinds of trends. We have the uptrend, we have the downtrend, we have the ranging or consolidation market. You get where market gets to range or consolidate over time. All right. So if you've been following, if you have questions, you could drop your questions on the chat, on the comments. Yeah, I would see it and I'll reply you. All right. So this is what a ranging market looks like. It's a no highs, no higher, no higher highs and no lower lows. You get the highs are the same, the lows are the same. It's a no higher or lower highs being made. You understand? So all the highs are on equal ground. The market is moving sideways, or it can also be called consolidation, or it can be called a range of indecision, right? So remember when we were talking about support and resistance? So this is kind of like an example of a support and resistance, but it doesn't mean that inside the ranging market is not trending. If you notice, this was a low, same thing as this low. So in this area, market was ranging here. It was just going sideways, up and down, up and down, up and down, up and down. But if this was like a daily time frame, if you move down to a lower time frame, I'm going to make a video of um understanding trading view, the trading view site on, and also how to make use of trading view sites, especially when you want to do your analysis and all of that. So when you go down to a lower time frame from here, you will see that this move here was actually a trend. Market would not just go all the way straight. Markets would have series of highs and lows within these points before it gets here, then reverse. But on a higher time frame now, it is looking like a ranging market. But on a lower time frame, there is series of downtrends and series of uptrend within that range. All right, within that range, within the high range and the low range. So this is how it looks like on a real market. You see what I'm talking about? So on a real market, this is how market gets to just stall inside this box. It's like there's a box that it is failing to break above or failing to break below. It is just within that point. But if you go down to a lower time frame now, let me zoom in. So if you go down to a lower time frame now, you're going to see that this whole move here was actually a proper uptrend. And you see that this whole move here was a proper downtrend. So it is just consolidating within a place. All right. This is what, at this point, you don't trade. You wait for a breakout. Let market breakout, retest, give you a proper confirmation before you enter. So before we're done with this, we'll do what confirmations are. What are confirmations? Right? I'm going to make a video on that. Let me even write it down. So let me write it down so I don't forget. I know some of you would want this. 1 minute, please. So it's what a confirmation. You could also call it checklist. So I'll do a video on checklist. All right. I'll do a video on checklist. So yeah. So if you understand this, then we can move ahead. So this is another example as well, where market gets to stall within a place. It's just within that place. It's not until now we have a break. This is another example of what it means. So know this, the trend is your friend always. The trend is always your friend. Always, always your friend. So at this point, we're getting into another, sorry, We're getting into another topic, which is very important. Now, let's talk about break of structures and change of character. Let's talk about break of structure first, then I'll tell you what change of character is. So, first of all, break of structures occur when price breaks a key high, right, in an uptrend and a key swing low in a downtrend, continuing the current trend. Are you understanding? So just like what I showed you now, those areas in which you saw that I showed you that market keeps breaking and be going higher or breaking and be going lower are the areas of break of structure. Okay. So it's break of structure talks about trend continuation. It is breaking a high, a key high, swing high, or a swing low. All right. I would explain what a swing high or a swing low is, but let's go to the chart. Now I want to take you to a real chart. So let's see. No, I don't want this. I don't want this. Let me open another one. Yeah, okay, this. Yeah. So let's see this. This is actually a live trade and it's ongoing at the moment. Yeah, so I would explain this, what I'm talking about here. So now at this point, let's go to a higher time frame. What time frame is this? I can't seem to see it. Is it my eyes? Or is the contrast too high? Give me a moment. I have to reduce this contrast. Looks like it's too high. Yeah, the contrast is too high. Oh yeah, it was actually too high. Yeah, it was actually too high. No wonder I wasn't seeing it. So I hope you can see my screen, although it looks like I've actually reduced the volume, but it's fine. The brightness, but it's fine. So I just want to show you guys something. So let's take, for instance, what area? All right, let's look at this area. This area here. This area here. Yeah. So let's look at this area here as the uptrend. Then I'll point out somewhere which is going to be our downtrend. Yeah. Let's see. Okay, so where's going to be our downtrend? I want to look for a significant place that makes a lot of sense. Okay, yeah, so we'll look at this point as our downtrend. Yeah, yeah, this is our downtrend. Okay, so now let's start with the downtrend. If you notice how markets, let me just shrink this a bit to this point. Yeah, so this is fine. So if you notice how markets kept making from a high point, it made it sorry, it made a low point, it made a high point, it made a low point here, it made a high point here. So this area was the high, this area was the high. This area, this is for a downtrend. This area now was the low, and this whole area here was the high, this whole area. So we could pick this last one as the area here and also come down to this downside. There's an area here, then there's a downside here, right? Yeah, so if you notice how market did all of this, so the swing point, what swing is from the point of, if you actually know what the word swing actually means, it means like when you swing a baton or you swing a a wood, or you swing an axe, like people who cut trees, they use axe, right? So you swing an axe. So that swing, the move it makes, like something like this curve, this curvy move. Yeah, so it kind of indicates that um there's a swing high and there's a swing low. So market gets to swing from the top down and swing from the down top to the top, right? So, okay. So these are the swing highs. The swing high is like your highest point before the down point, before the down move or the bearish move. Then you have this swing high, then you have a swing low to the upside, you have a swing high again coming back down. So your area, which is your area of swing, right, at this point was not yet taken out. You just made a high. That area of swing is what is called your high. So when market now breaks the area, let's use this for example. So when market swung here, it swung to the downside and also did a swing to the upside, right? Before coming back to swing to the downside. So if you notice, there was an area of swing low. Let me take out this. I'm going to put it back, although that's my analysis. So I'm using that to like indicate the swing points, right? So this was the area of swing low, right? Where it came down to swing to the upside, right? Then this was the area of swing high here, where it came down, came up to swing from the upside to the downside. I don't know if it makes sense. If it makes sense to you. Yeah. So now this low point here where market took out to continue the trend to the downside. Yeah. That low point there is what is called your break of structure point. This area here now. This is what is called your break of structure point. So everywhere you have market keeps taking out the lows on a downtrend, it keeps taking out the lows and keep taking out more lows, more lows, more lows. Those areas where market keeps taking out those lows are called your what do you call it? They are called your break of structure points. So most times what we do, we will just name them. This is an area, this is how far it came with the week. It came all this way with the week. I think we've talked about candlestick, yeah? So yeah. He came all this way with the wick, and this was where we had the break. So all these lows were a point of what do you call it? A point of support to swing to the high point before it gets to swing to the down point. Yeah. So until market takes out all these lows or these swing low points, it is still consolidating there or it's still going up. All right. So these points are usually your break of structure point. So at this point, you just name it BOS. So when you see BOS on charts, you know this is what they mean. They mean break of structure. Market has broken to the downside. So usually what you do is once market breaks to the downside, you wait for market to come back and retest. And this retest is like swinging from the downside to the upside before it keeps giving you a bearish move. All right. So this is a point of swing low, a point of break of structure. There's another point of break of structure here as well. Yeah. So there's another point of break of structure here where market gave this high to break to the low side. All right. So that is it for break of structure. So we can do for the uptrend as well. I know we talked about the uptrend. Yeah. So for the uptrend, we have our swing from just what I just called swing. Now you would understand that this is our swing point. Yeah. And markets came all the way from here, pushed all the way from here to this point here. So I'll just mark it. This is our swing point here to, why is this thing shaking? Yeah, to here. So swing point low and swing point high. Okay. And swing point high. All right. So whenever market takes out this high again from this swing point, because why I said the swing point, this was the place that it gave us an obvious low, an obvious swing into the downside. Here, it looks like it's still consolidating within that point. There's no actual low, but a lot of people could still say this is the low and this is the high and this is the low. But I like something that is precise. I like to be precise, and I like something that is very obvious that I could see with my own eyes. So when market changes direction, I know that, okay, market has changed direction. So this whole low here, you see this candle here that came back to tap on this area, it is still indicating that we are still in a low area or a swing area, right? It's still indicating that we are still in a low area and a swing area. So market swung to the downside to this point and came back, consolidated around that point. This was the last drop to that area before market then used this point here now to break off that point. So you're going to draw a line from this area here, from here, all the way to this point to indicate where the break of structure happened. Okay, to indicate where the break of structure happened in this case. I don't know if this thing is too low. I'm thinking it's too low. Yep. Okay. I think it's okay now. Just one more. Yeah. So, yeah. So the point where it did that break above, to break above the swing points, that point is now called your break of structure, as long as it keeps going along with the trend, you get. But if you see this kind of situation where markets didn't go along with the trend anymore to break high, instead it came down to break this swing low point. At that point now, you could say market wants to change direction, and that is what we are going to talk about next here. Where's that picture? Yeah. So that's what we're going to talk about next, which is called the changing of character. All right. So if you understand this, let's do a recap. So market was trending upwards, but then starts breaking off a swing high, which is now called your break of structure, right? All your swing highs that go down, swing highs that go down, market took it away. There was another swing here that went down, market took out that one too, in continuation to the trend. Same thing with the downtrend too. Swing low, that swing to the upside, market came to take it out. Swing to the upside, market came to take it out. So that area of your swing, or that level of your swing, is what is called your swing low or your swing high. And when market takes out that level, you can put a line there and indicate that that was the level of which market doing a break of structure. So you don't use break of structure when market is changing trend. You only use it when market is continuing the existing trend that is there. So if it's an uptrend, the more market makes more uptrends, more higher highs, more higher or more lower highs, the more market is giving you break of structures. So it's breaking the initial highs. So those highs are the structures that were put in the market. So when market breaks it, it is called the break of structures. So break of structure confirms the trend is strong and likely to continue. We look for buy setup in a bullish break of structure and a sell setup in a bearish break of structure. So break of structure is for trend continuation. Understand that. So now talking about the change of character. Now, change of character, which is known as the CHOCH. Most people use that phrase or this short form to on their charts. You would always see it there like CHOCH. All right. So change of character in this case occurs when price breaks a key level in the opposite direction and in the opposite direction of the current trend, signaling a potential trend reversal. Do you understand what I mean? Now, in this was a downtrend, right? Giving you a lower high, a lower low, a lower high, a lower low, a lower high in all your swing points, right? In all your swing points, it keeps giving you lower low, lower highs, lower low, lower highs. Now, once market turns again to take out the last lower high from a downtrend to an uptrend, once it turns again to take out the last lower high, then at that point where that swing point where it took out for your last lower high as a downtrend, then that point market has changed character to become an uptrend. So the downtrend is a character, and uptrend is also a character, right? The difference is that the character of a downtrend is going down. The character of an uptrend is going up. So when you see cases like this where market comes in and takes out the last high of that low, the last high of that downtrend, then that point where it took out that point, that's high, is called your change of character, right? And remember, a candlestick body has to close above that high. A candlestick body has to close above that high point. So for a downtrend, where market goes from an uptrend to a downtrend, once market moves from an uptrend to a downtrend, where it gives you your last lows, your higher lows, your higher lows, your higher lows, all those higher low points that swung to the upside. Then the last one, the last higher low point that swung to the upside was now taken out by market. You see what happened there? Market took that out. I will show you in the live chat now. I think we had one currently. Let's look at the one that we had currently. No, not this, not here. Yeah, here. So you see what is happening here. So market was in an uptrend at this point, yeah, and you see where the our swing low is. This is where our swing low is. And market, what now happened? Market came and took out that swing low area. All right, market came and took out that swing low area, took it out. You could put it here, you could put it on the week, however you want to put it, it's up to you. So market came and took out that low point. So remember, if it's a continuous uptrend, it doesn't take out the lows, it takes out only the highs. If it's a continuous downtrend, it doesn't take out the highs, it takes out only the lows. So, but in this case, where market now comes to take out the low in an uptrend, right? The low swing or the swing low points in an uptrend, it is called your change of character. So in this case, you could tag here as your change of character, CHOCH. All right. This is a point of change of character. And if you notice, it means that is the signaling, that is the signal or market giving you a sign that it is no longer going to continue an uptrend. It's going to continue a downtrend. So at that point where you have seen that market has given you a signal to sell, it is now a downtrend. So now it has given you a new high. There's a new high that has been created, which is this swing high here, right? Which is this swing high. And it has also given you a new low, which is this swing low point here. Are you seeing what I'm showing you? Sorry. Yeah, this is the swing low point here because now it has taken out this one. Now it has given you a new high and a new low point. So what market is now doing is going to create a high swing and a swing high point for it to continue downtrend. And it means for it to continue, it has to break structure, just like what we talked about before now. There was a structure that had to be broken. If you look at it from this point, let's say we're putting it here. Yeah. So you see? So this point now becomes your break of structure here. This point now here becomes your break of structure, break of structure. Yeah, this point now becomes your break of structure. Sorry. Yeah. So yeah, so this point now becomes a break of structure. So after market has changed character, what it does is it goes up to give you a high, a swing high point where it can use to come down to start going or changing. The character has changed, so to use these high points now to come down to start giving you a downtrend, a downtrend. So when you see something like this happen, what you're waiting for is for market to come back to give you a high point. And this high point is usually your swing area, your swing high. If you notice, this was the swing high. This was the swing high point where market came and didn't break above. It just came around this area. And then it's, I want to drag this down. Yeah, it just came around this area, gave you the high, consolidated there a little bit then before it took out that point. So that point now is what now makes your high valid. This is what now makes your high valid, and market keeps going. And market keeps going down. So I hope you know the reason why I'm using this ACK tool is called an ACK tool. Yeah, an ACK, a tool in what do you call it, in tradingview.com. It is called the ACK. Look at where it's found here. But like I said, I'm going to do a, where is it? 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 So, however, though, it's here. I think that's this spotlight sign is covering it. Yeah, so this is it. This is the ARC tool. Yeah, it's here. It's called the ARC, ARC. All right. So this is what it looks like. So for a downtrend, the same thing. For a downtrend to an uptrend, this is a situation of an uptrend to a downtrend. Let's see if we can see from a downtrend to an uptrend. Let's see. What time frame is this? 4 hours. Okay, yeah, this is a downtrend to an uptrend. So in this situation where market keeps making this, so you could see that all the break of structure points are here. This was the swing low that it had. Yeah, market came, took it out. It made another swing low, a swing low here, a low here. This is actually the swing low point here. So, but let's put it somewhere here. Yeah. So, so all these points now are known to be your break of structure points. They are not your change of character points. So all the swing high, the last swing high, once the last swing high is taken out, this is our last swing high in this case. Yeah, we have another swing high here, which is this area here. Yeah, we have another swing high here. So there was a swing low, a swing high, a swing low, a swing high. Then at this point, it gave you another swing low here. It gave you another swing low here, this area. Yeah, I already put this. That was the reason why I put that there. So, sorry. So it gave you another swing low point here. Sorry, my bad. So yeah, so it gave you another swing low point here that didn't get up to this one. If you notice how it didn't get up to this one, but it came back down to give you, so there was a swing high, down, swing low, swing high, but it was still within this point. So it is still bearish. Whenever market has not broken the last swing low that took it to the last swing high, right? This was a swing low to the upside. This was a swing high to the downside. So whenever in a downtrend like this, whenever market has not taken out this swing high to the downside and the swing low to the upside, if it has not taken out this thing, this last one, it is still a downtrend until market takes it out for real. All right. When market takes it out, then you can now be sure of an uptrend. So this was the height of it. This was the height where market now came to take out that swing high. All right. So in this swing high now, we have a new area, which is here. Let me shift this. We have a new area, which is here as your new swing low, right? That resulted in this was your new swing low that resulted in that taking out. All these other ones were still, if you go down to a lower time frame, you know, I was saying something like that. This is 4 hours, so if you go down to 1 hour time frame, you see that all this major move that is like this, they are also a trend in a lower time frame. All right. But in this time frame, it is just candles lapping each other, and we're not taking it serious. We're taking from the swing area, the low area points. That was where market came from to take out this point, and it gave you a swing high here. You get, so this point now becomes your change of character because this was the last place the market, this was the last swing high that went to the downside that created this swing low that started trending to all the way to the upside back. This was the swing low area. All here, they are the swing low area. So, but the reason why I picked this one, this was like the obvious or the last obvious swing low because there was a high here that came to that point. All right, that took out, this was the last swing low point that went high to take out this point here. All right. So now you've had your swing low creating a swing high that caused a change of character. So whenever this swing high here is broken to above, it is now called a break of structure. So if you now notice in this case, once market crossed here, change character, the market now became an uptrend. You understand? The same thing happened here. This was the swing low area when market created that swing high area. And once market took out that swing low area, this place became your change of character. From this point now going back down, you start having different breaks of structure, breaking of structure, breaking of structure. So that was the same thing in this market too. That was the same thing I had in this market. So there was an obvious swing high point that came down to take out this point. You get to take out this point and make these points your break of structure. So the last swing high, which is this, that took out this point, that was where I marked as a swing high. So if market had taken out this swing high points, then I would consider this market to now be a change of character. But it didn't take out it, you didn't take it out. If you see what I put there, the line I put there, I indicated a change of character points. So, but market didn't get to that point. Candlesticks didn't close on that point. So instead, it came up here after the break of structure. It came up here to give an entry, and market is trending downwards. It's heading downwards, and that's how you trade. You understand? Don't get these things twisted. Don't get it confused. Don't get confused about these things. It is easy. It is simple, but you have to practice to master these things and become good at it. Okay? So let's do a recap on the change of character. So a change of character occurs when price breaks a key level in the opposite direction of the current trend, in the opposite direction of the current trend, signaling a potential trend reversal. All right, we see that here. And say price breaks the previous lower high, potential trend reversal to the upside. Price breaks the previous higher low, potential trend reversal to the downside. The same thing I've been explaining. So the key takeaway here is change of character warns us that the current trend may be ending and a new trend may be starting. So look for confirmations and high probability setups. So this now here, break of structure is like the overall, this is now the overall statement. So break of structure focuses on trend continuation, while change of character focuses on trend reversal. So I hope this video made sense to you. I'll do a different video on what a I'll do a different video on what a trading range is because it is related to what we are actually talking about right now. But I'll do a different video. I don't want to compile those informations here. So you get to study this thing, understand it, go back to the video to always watch it so you get to know what you're doing and remind yourself of these things. And if you have questions, drop your questions on the comment section. Subscribe if you're not yet subscribed. Turn on your bell notification so you would know when I post the next video. And please drop a like button and share this video. Share this video to anybody that you know that would need this information as well. So we're doing this. I am doing this to help you guys. And I hope this is really helping. So see you guys in the next video. Ciao.